Hey fellow investors and fellow stock guardians, it's Thursday, April 1st, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a green stock market. So folks, today I was gonna tell you that our company, StockCard, is going to go public via a SPAC merger as an April Fool's Day joke. But then one of our board members changed my mind. So we are not going public via merger with a SPAC, at least not yet. Happy April Fool's Day. Beyond that, I looked into the stock market indices movements and dug into two second-hand car marketplaces that took the opposite directions today. The stock market indices started April on high notes. The market is high with excitement thanks to the $2 trillion infrastructure investment plan by President Biden. Moreover, the Institute of Supply Management reported its index of national factory activity at the highest level since December 1983, and that helped boost the excitement further. But the story wasn't all rosy. The new jobless claims report came higher than expected, which means there are still more people who are losing their jobs due to the pandemic. The overall story in the stock market is what it has been for months. The economy is still on its way to recovery, but far from being there. Looking at today's winners and losers on a stock card, I noticed Yushin, a second-hand car marketplace in China, soared by more than 70%. The stock price jump is more like an April Fool's Day joke than reality. Apparently, two Chinese funds plan to invest $300 million in Yushin at a $600 million market capitalization. That's a lot of money, but not worth a 70% price jump. In contrast to Yushin, CarMax is America's largest used car retailer and its stock dropped by more than 6%. I noticed the stock while looking at the companies that reported their earnings report today on earnings calendar page on StockCard. With its earnings report, it also announced that it is acquiring the outstanding portion of Edmunds. Edmunds is a standalone company that CarMax has already invested in, and today's acquisition allows the company to enhance its online car buying capabilities further. Combine the money it has to spend on the acquisition with a declining total used unit sales and comparable store unit sales compared with the prior year quarter, and the news was disappointing to investors. However, check the company's stock card. Its operations are profitable and generate free cash flow. The stock price is hovering in a fair share price range with a price to sales ratio hovering lower than the comparable sector. Overall, this may be an opportunity to pick up some shares of a market leader at a better price. Straight to my watch list for now. Tomorrow is the Easter holiday in the United States and the stock market would be closed. Happy Easter to you all, and I will see you on Monday. As always, if you like to give a stock card a try, research as many stocks that you want, and receive a stock pick ideas from successful investors, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you next week.